Hello, my name is Tony, and thanks for having you for today for Blog Media's interview. So I'll do a quick Korean intro and then we'll go right through the interview. So
Awesome.
we'll be okay? Yeah, okay. Okay, I'll go through. 네, 안녕하십니까 블록미디어 시청자 여러분. 오늘은 비트맥스를 만든 남자, 코인에서 어떤 이야기를 해도 모두가 그를 주목하는 남자, 헤이즈를 만나서 인터뷰를 진행해 보도록 하겠습니다. 최근에 그의 말이 굉장히 많은 화제가 되고 있는데요. 항상 비트코인 예측부터 최근에 매수하고 있는 하이퍼 리퀴드, 지캐시 등 다양한 알트코인까지 블록미디어와 함께 이야기를 나누어 보도록 하겠습니다. So hello, Arthur. How are you doing these days?
Great, I'm excellent.
Yeah, so thanks for joining us. So for Korean readers who know you as the BitMEX guy, can you tell us what you're up to these days with Maelstrom and about your investments also?
So Maelstrom is my family office. So a hedge fund with only my money in it. We have a team. We started doing this around 2023. We do a few things. On the early stage side, we invest in token projects. Probably our most successful investment would probably be ETHERFI, sort of the neobank on Ethereum, and they did staking. We also do advisory. So we get given tokens and we advise projects. Our most successful project is Athena. I wrote the paper that sort of inspired Guy and the team to build Athena. We became a founding advisor, and obviously they've done very, very well in terms of building the third largest stablecoin out there in a very, very short period of time. And then we do liquid trading. So I trade a directional book on different cryptos in the space, and yeah, that's kind of the three things that we do.
Okay, so I read some of your essays recently. So a lot of your recent thinking, I think it starts with one thing like the price of oil, which is because of the war. Why does oil matter so much to crypto?
I think oil matters to everything. So everything that we do, this screen that we're talking on, this internet, this AI, this crypto, it's all about converting energy into some sort of useful work. And so if the price of energy rises, then we have to evaluate whether the things that we own in our portfolio will do well or poorly. And so I think in this particular point in time in the investing landscape, it's all about, can AI withstand really, really high oil prices? And so that's sort of the first thing that I think about, like, would you invest in AI if oil was $200? And if so, like how? Would what you own change? Would the whole AI story sort of start collapsing on itself? And so I think that the oil price definitely matters for AI, because if you think about what AI is, I take energy, I make it into compute, and then I take that compute and I create intelligence, and I do something useful with that intelligence. So if the base commodity that generates the intelligence becomes more expensive, then I could do less useful work. And so I think that's why energy matters to AI. And the interplay between Trump and the IRGC in Iran, and whether or not they can ever come to some sort of agreement to end this war and reopen the strait in some way, shape, or form, informs what the medium-term price of oil will be. Obviously, the point I made in my essay is the lower the price goes, the less reason that both sides have to come to an agreement, because the high price of oil is sort of like a catalyzing effect of, okay, find a deal, because neither of you two want to be responsible for the global economy falling off a cliff. And so, oil price fell as this MOU was signed. Now we're seeing backtrack on whether or not Iran can stick in the deal, if Israel is going to continue to bomb the Middle East. So we don't know what's going to happen. Oil prices could rise. Countries could say, okay, well, I need to stockpile more oil sort of to rebuild my inventories. That could generate a demand push medium term. So again, the question is, can your portfolio withstand $200 oil? If not, what has to happen? And so that's the mental model that I approach this with. And okay, right now oil price has fallen a lot since this MOU has been signed, but I guess we're still questioning whether or not it's going to have any lasting effect. And could we be back at $100 oil and next week if both sides walk away from the deal?
So you're expecting that there will be some you're having a long position on oil basically on your portfolio. Is that what we can maybe interpret?
Yeah, so I own oil majors that produce and market oil and other hydrocarbons because I believe in the long term, countries are going to stockpile these things so that, when another war happens in the Middle East, and we know that there will be another war in the Middle East, you don't want to be caught short again. You don't want to have gone to your people saying, okay, I fucked this up twice. Like, how can you not protect yourself when you know that you receive all this stuff from this part of the world? They always are fighting. It doesn't matter who's right or wrong. Like, if there's a chance where the things quiet down, what do? You buy a bunch of it and you ship it to your country and you store it, right? Like, I think that's just common sense.
So, I'll just go through maybe some altcoins that you have bought before. So just a month ago, you were like buying all of the altcoins like Hyperliquid, Near, or Zcash. So you pointed out that the Wall Street competition for these Hyperliquid's fee-driven buyback model also. So which part are you in right now? Are you buying more altcoins, or you're on a short position, or you're having no positions on altcoins? Can you deliver your thoughts also?
So yeah, we started acquiring a lot of these positions in January, February of this year. We were vocal about our narrative of why we own a lot of these coins. They've done very, very well. We took some profit, and now we don't have positions in any of these, Hyperliquid, Near, Zcash. We don't have any positions any longer in these tokens. That doesn't mean that I don't think that they're going to go up in price, but I think that this narrative has become consensus. And I don't like to invest in consensus narratives, at least in the altcoin space, because you don't get the asymmetry in the trade. And so that's why I felt it was a good time to take some profit, sit back, evaluate the landscape, see what other trades offer some great asymmetry out there versus the token price and where I think the narrative could grow to in the short term. And so that's why we don't have any positions any longer.
Okay, so also period peoples love to copy your trades, see what you're buying, and look at your positions. So do you think like copy trading, an influencer maybe, or a good investor like you, is it a good idea or a bad one?
It depends. I think it's a lazy way to trade, and I am guilty of this as well. Like, I was trading AI stocks. Do I spend all day looking at AI? No, I guess follow other people. But I have a macro thesis in mind, or like, okay, look at the chart. Okay, it looks like maybe it's topping out here. Maybe I should, exit the trade. But am I doing like fundamental research on all these AI companies? Fuck no. Like I read some podcasts. Okay, I'm taking my own risk, right? I'm not saying that it's their fault for why I lose or make money. I still have to make my own decisions, but it is a very lazy way to trade. And so I think that when you trade in a lazy way, you can't be surprised if you get negative consequences for that in terms of underperformance or what. Like, you can't rent conviction. You have to believe in what you're buying, right? And so just because somebody else is doing it doesn't mean you actually intrinsically believe it, because if you get shaken up a bit, you might exit the trade early when you should have stayed and ridden the upside, because you didn't believe enough in the trade yourself. And why didn't you believe? Because you didn't do your own research. You didn't come to your own opinion. Now, maybe it can be informed by, another influencer or someone, but like at the end of the day, you should, okay, that's an interesting opinion. Let me do my own research. However I do research, for my own opinion. If it matches, that's great. This person was a signal that, focused my attention on some particular part of the market, and I went in and I engaged in some research, and then I made my own opinion, and then I eventually did the same thing they did. But at least I feel conviction in that idea. And with AI, it's easier than ever to sort of research a particular company. Oh, this person mentioned that company, that shitcoin, that crypto. Okay, let me do some research about what they said. Does it make any sense? Oh, I really believe in that. Okay, maybe I'll do it too. But I guess at least I did some of my own research and came to my own conclusions. So I think that following influencers and copy trading is a very lazy way to trade. And it usually ultimately results in losing money because you lack conviction in what you're doing.
So what your point is that you need to do your own research to get thoughts about your investments and to have conviction on it. Is that right?
Correct.
Yeah. So as you said in the first, you said AI sucked up all the money that should have gone to Bitcoin, and the market really feels that because Bitcoin is like around 60K. But your other point is that this AI boom is ultimately a bubble and it's eventually going to pop. So what's the catalyst that finally bursts it? And if the AI bubble deflates, do you think that liquidity will rotate back to crypto, not to AI again?
So I think ultimately there's, the energy thing could happen, right? War could pick back up, and we have no control of that. We don't know what's going to happen, and oil could be $200, and then I think that's going to be very difficult for AI to continue to rally with $200 oil, right? But that's probably the least of my concerns with when I think about AI. The two biggest things, at least that I'm concerned about, is number one, AI is this story that I can create a lot of debt and off-balance sheet liabilities. And I say, oh, this chip is going to be valuable or productive for 6 years, when in fact, it's most likely to be productive for 2 years. And this is just fact in terms of how the obsolescence curve of a semiconductor and what the rental values are for these chips. So you have a mismatch here. And that is probably one of the biggest risks of this AI CapEx bill, is you're basically borrowing money and letting it on fire after a few years, when you told your bank it's going to be worth something for 6 years. And that's, that inconsistency has to resolve itself at some point. The second is that there is this assumption that the end customer will always pay up for the best and baddest US frontier AI model. And so therefore you need to invest in the newest NVIDIA chip, and you need to, continually to build out this CapEx, because there's all this demand for the frontier model. Where what we've seen in most other verticals and industries is that customers, if they're offered something that's just as good or slightly worse, but way cheaper, will go with the cheaper option, aka stuff produced in China. Right? You take a look at EV vehicles, right? Why are Chinese EV vehicles doing so well? Because they're just as good, but they're way cheaper. And so as a customer, I'm like, okay, well, do I really care about this brand? Do I need the Korean brand, the Japanese brand, the American brand, the European brand that's 5x more expensive than the Chinese version? No, I'll go take the Chinese version, unless my government does some sort of protectionism and bans the Chinese EVs. But when you have an open market, I'll take the Chinese EV model because it's just as good and gets me where I need to go, and it's cheaper. So why wouldn't it be the same with AI? Do I need Claude 4.8 or whatever that costs 10 times more than DeepSeek or Kimi or one of these other models that's slightly worse? But I'm just fucking, answering emails and trying to find the cheapest hotel for my vacation. Do I really need the most craziest model? And if I'm a company, if all I'm doing is doing OCR and a lot of physical documents to upgrade my process flow, easy stuff, do I really need the really expensive US model? And the companies are taking my data. It's a closed source situation. I don't know what's fucking going on at Anthropic and OpenAI, right? At least with the Chinese one, I can take this model, I can run it on my own machine. It's open source. I can see what it's doing. And I have control over my data. It's a better situation, and it costs less money. But the entire AI story, at least from a Western capital perspective, is that everyone will always take the most expensive model, and therefore they need to continue to buy the newest and most expensive NVIDIA chip and continue to invest in more data centers, because the demand is going to go up and up and up and up and up, right? And so that's the thesis. And I think that those two assumptions will be seriously challenged, and that will ultimately bring down the AI story. Not that AI is not productive, not that AI will not generate earnings for a lot of companies. Companies will make a lot of money. The problem is, what is the multiple you pay for that money in the future? We've taken so much future demand into the present that the future has to be so ridiculous for us to even break even, that once those assumptions start to change, people are like, fuck this, I'm out, right? I made some money, get me out. And I think that is what ultimately does in the AI story.
Yeah, I think that's what I think too, because people can just use Chinese models or maybe DeepSeek, because AI or AGI don't have those big moats. If the price gets lower, people just change their model. So I think that could be also when the bubble goes out. And beyond just the flow of money, I think there are also some political dynamics too. You think Trump might suddenly turn against the AI companies to win the election? So do you really believe he'd do that?
I think that Trump is a very skillful politician. And if he believes that there are enough marginal votes to secure the victory for the Republican Party in the House and the Senate, and all it requires is him to change the rhetoric on AI to match this angst that the average American feels, he'll do it. And that doesn't necessarily mean that he will ultimately change the actual policy when all is said and done, right? Because it's just rhetoric. It's just a campaign promise. Most politicians never keep their campaign promises, and people don't expect them to. But they do expect them to listen to them and for them to feel like they've been heard. So Trump can hear the people, oh, this AI thing's a problem. What do you think this Anthropic, bitch slap is all about, right? I think it's mostly about demonstrating that the government cares about the security of AI, even if you could combine a bunch of models together and probably get the same performance of Mythos and Fable. Like, I think it's doesn't really matter. But the posturing is great. Oh, look, this Dario guy, he took all this government money. He had all these government contracts. He's using, university graduates who, probably got some government funding too. And he fucking showed him his place. Well, if you're an American company and you're going to be in America, then you should care about the American, national security, whatever the fuck, right? I think this is great politics. And at the end, it's actually not going to do very much, if anything. And it demonstrates that, he's in charge and AI is underneath the government, not above the government. And so I think this is a very good political message for Trump in terms of what the average American is afraid about, of Dario and Sam and Elon just doing whatever the fuck they want and completely fucking up, the dynamics in the country and for humanity itself, possibly.
Okay, so also you've written that countries are trusting the US dollar less and buying real things like food, energy, infrastructure instead. So isn't the dollar's golden age ending? And is that the real long-term reason to own Bitcoin?
Well, Bitcoin depends, just because the dollar goes up or down doesn't necessarily mean Bitcoin will be the beneficiary, right? We've seen trillions of dollars of money printing over the past, since 2 or 3 years, yet Bitcoin from its low to high only went up, 2x from the previous all-time high, right? So people think this is a very lackluster bull market. Why? Because again, AI took all the capital. So just because the dollar depreciates doesn't necessarily mean Bitcoin has to rise if all that capital goes into the AI story, because the demand is there and it makes sense. So I think that it's part of it, but it's not the whole story.
Okay, so also your Bitcoin number keeps changing, like your target price. So honestly, where do you see Bitcoin at this end of the year of all the sentiments?
I say it's probably about the same price, 60,
same
70,
price, like 60K around.
Ish. Yeah.
Okay. Can you give more maybe explanation about it?
Again, I think maybe the AI bubble cracks, but the more that the government's doubled down on financing and the banks are willing to lend, then the less that's likely to happen. If the oil price stays contained, then again, the less likely that is to happen. And then again, if you are an average investor, you've got a unit of fiat, it's going to depreciate. What do? You get on the fastest horse. The fastest horse is still AI. And so I don't see how Bitcoin is going to rally aggressively when the marginal unit of fiat will go into AI trades.
I think in the Korean market, a lot of Korean traders have gone to trade some Korean stocks and also AI stocks in America or maybe Japan. So do you think these people will come back to trade altcoins? Because altcoins, what traders think right now, even in the crypto people or degens, think they have no usage or they're going to be down always, and their price is not very good these days. So they are very skeptic about this market. So what's your thoughts about the future of crypto, maybe?
So I think crypto will fall with AI, but will rally aggressively afterwards as the global governments and central banks try to print money to save all the financial institutions who lent money to this AI story, especially the insurance companies that are backing up a lot of these deals. That being said, I think a lot of investors, especially in Korea, because Korea is one of the craziest markets for this stuff and the amount of leverage that people are using, are going to be wiped out. They won't have any capital to invest in Bitcoin when it's time to invest in Bitcoin. That's the unfortunate part. These triple levered ETFs, these accumulators, all these structured products that people are trading are absolute garbage. Yet, people are piling into these things. The volatility on the upside is absolutely enormous, and they're going to get crushed. And it's really sad that they're not going to be able to have any capital to invest, I think, in the next massive rise in crypto as the global central banks print money to try to save the financial institutions from this lending money to this gross capital misallocation.
So as we did a survey for the Korean market, so some Korean investors are still investing a lot in altcoin, and they think that the market will recover. Like about 90% of them think that the crypto market will recover. So do you have any thoughts or any advices for them to maybe if you could say one thing to them, what would it be?
Stay as liquid as possible. Don't use leverage. It's going to be very, very volatile. And you want to have dry powder available to invest in high quality coins when they're aggressively sold off in price, if we have sort of a massive risk off event, or just in general because things are volatile.
Okay, so I think Korean blockchain week will be in maybe 3 months. So do you have anything to say more about Korean audience who are watching this video? And who loves
I think it'll be very interesting to see where the Kospi is at in 3 months' time. So again, there's nothing wrong with the AI trade. I think the problem is that people are using a lot of leverage and they're trading a lot of products with embedded optionality that they don't understand, especially these leverage ETFs. I can't stress enough how bad these products are. Like, you should never, ever, ever, ever invest in a leverage ETF. Just buy a futures contract if you want some leverage, or just buy the stock, right? These stocks, SK Hynix is up 10x in a year. You don't need leverage, right? So just buy the stock. Don't use any leverage, because on the downdraft, it's just going to destroy people's financial balance sheets, because these leverage products are just so terrible on the way down, or even just a little bit of volatility. I think there's one in the US called Kovru. It was like a 2 or 3x leverage Kospi ETF. And on, last week and a half, whenever the Kospi went down 8% that one day, the one down day when the Nasdaq was down 5%, that ETF was down 41% on the day. That should be a warning to anyone. Never ever use these products, right? Okay, being down 8% is bad, but it's not that bad. You'll survive. Being down 41%, that's probably game over for a lot of people, right? You're not going to be able to get back on the horse and re-participate in the upside in these markets. So again, I think if you're going, the Koreans are just as guilty as anyone else. Don't use these leverage products in the stock market. Just buy the stock with no leverage.
Okay. Yeah, Arthur, thank you for your interview, and thank you for coming to our channel. Always enjoying the interview. So yeah, I think that's all for our interview right now. So
awesome. Great.